All right, so welcome to another video here where I go ahead and give you some insight on some stocks as far as the technical goes. Now, keep in mind, none of these are recommendations to buy, sell, or trade anything. It's just my own personal opinion from reading and analyzing charts over the last many years. Now, today we're going to take a look at Zynga, and they are basically a gaming platform, and they are being acquired by TTWO, which we'll talk about in another video. But here, what's going on is as we check these things out, here is Zynga, and these are the types of games that they have, basically Farmville, Words with Friends. So I don't know if you play any of these or have played any of these, but some of them were really annoying for me back in the day, just because all the pop-ups would come and I'm just like, oh, how do I get this thing off? But, you know, there's like Wonka, World of Candy, Game of Thrones, you know, so they got a lot of big games. So they're making money from a lot of advertisements and that kind of thing. Now, this company is being acquired, and if we take a look here, it's being acquired by TTWO, which is Take-Two Interactive. You can see Take-Two is selling off, so this is kind of the main thing that happens is that the company that is buying, right, when you think about it, the company that's buying, it has to use a lot of cash and capital to buy this other company, and that's why TTW goes down. But when you look at Zynga here, this one is popping by quite a bit. So when we really start evaluating what's going on, you know, this stock right here, we got it, and then boom, it skyrockets kind of to the top end. So anyways, let's go ahead and do a quick analysis of this stock. I mean, it is a cheaper stock, but there's going to be a lot of news and hype about it. The thing with these companies is when they get acquired, right, it's not just like, hey, I go ahead and buy a company, and all of a sudden everything's now rosy and cheeky and peachy. No, it takes a couple of years sometimes to make some changes. With online companies, maybe it's a little quicker, but when you buy a company, right, let's say I had one store and then I wanted to buy the guy's store next door because I'm trying to expand. Well, by the time I take the wall down, get the permits, all that stuff, it takes time. So here, the same thing is no different, right? So this company, when we look at it and I start evaluating this company was going down quite a bit. Like you had its IPO, there was about $15, $18. It started to tank quite a bit. We had a little bit of a nice patch period between 2012, 2013. It started to go up. Then again, it went down. So you got this rocky roller coaster effect. And then really just kind of hung out here between like a $5 a share and $2 a share. We didn't know if this company would even survive. So when you look at this, it's really interesting because you look at these swing points and critical levels where it started to have some support. It came right back into those levels. And it was kind of holding that level, and they decided to acquire it. Like, you know, a company decided to acquire it. So we were kind of holding this sideways action for a bit, tried to get a little bit of a breakout right there, and then it couldn't hold that breakout. So it almost came back to the IPO price, right? And failed. So there wasn't a lot of buyers that stepped up because they're saying, hey, well, what is there? What is there, right? If I'm going to invest my money, am I going to go in something like this? Maybe on a speculative play, but I'm not going in like full-fledged on it, you know? So that's what's happening is people will buy these things more on a speculative level. And then eventually they go ahead and maybe buy a little more. But as from a company's perspective, like Take-Two Interactive's perspective, they're looking at this, how can we expand our business, right? So when we're looking at this now, okay, well, is this company going to be a good kind of company to hold for the time being for a little while till it continues to evolve and develop? Maybe, but normally I would rather go for the bigger company that acquired it because then there's some more substance, right? They're going to eventually grow and evolve and expand it. So here we were kind of going down the last few months, and all of a sudden this acquisition news comes out right here. So boom, it pops. So I will always tell you that the first day, it's not a trend, right? There's a lot of people that'll buy into this emotionally. So be very careful with that. If you're buying into something like this and you're doing it emotionally, you have to kind of see yourself from this outer perspective and say, hey, I'm really excited about this company. Then you're probably doing it the wrong way. Instead, you have to look at it from a trade perspective. How do I want to play this? Am I playing this on a longer term basis? You know, when this company all the merging acquisition gets done and filed and everything, or am I going to play this from the Take-Two Interactive perspective, and buy this a little later, maybe when it goes down a bit. So go back to Zynga. So looking back at the technicals here, let's just look at the monthly. So in either case, we basically, if you want to look at the technicals, the $5 was support. So what I would do is watch to see if it starts coming back again to that level. Probably not, because it's been acquired, and usually the acquisition gaps don't get filled. You know, typically they say gaps get filled. The few times that I've seen gaps don't get filled is when a company gets acquired, and this is one of those times. So it may or may not get filled, so be aware of that. And if we start zooming in kind of like a 2 or 3 day, you can see right here, we were kind of going down. Here's our trend line. There's our resistance, 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 and there's your breakout, but the breakout happened kind of right there, so it gapped up. So it's very tough to chase this thing. So if you're doing anything with this, I'd be more looking at, you know, selling puts at different levels if you're trying to buy into this company, or trading it with like a debit vertical spread of some sort. But from a technical perspective, you know, you have a nice clean breakout. It's nice. The volume is there, but it's really because of the acquisition. From a long-standing perspective in general, when a stock gaps up, this is usually a problem because there is empty space, and that can continue to pull back into that. So if you do a gap and fade, meaning a stock gaps up and you fade it, it can pull back down into it. If the acquisition, if people don't like what's going on and happening, it can pull back. I mean, again, it's just the first day, but it is up, you know, 45%. That's huge for a stock that's, you know, $6, $7, $5. So anyway, for now, this is good movement. It's healthy, but I would let this, the dust settle a little bit more and digest, because overall this stock was starting to climb up, and then it got weak for a long period of time there, for multiple months. As we look at it, for most of 2021, this stock was being very weak right there, and now finally got acquired, and the $6 level is kind of the key support level right there that was kind of holding up right there. And we're going to see if it pans out. If you want to play it a little safer, you could wait till a clean breakout of there. If you want to be more aggressive, you could get into it kind of now. But these are some of the technicals that I would kind of be watching. Overall, you know, key level, it's kind of around $13 is a critical resistance. So you could wait until a clearance of there. I didn't read all the filings on this. If it's merged, it might get not listed in the stock market here, or you may get shares of Take-Two. I don't know how they're going to play it out. But in either case, support kind of right around, we've got 560, 570. It probably won't get there anymore. You know, the news is done. It's broken. So if you're trying to get into it, you know, selling puts is probably the way to do it. If you're trying to get into it, like maybe at $7 or $8, you could try and sell puts. But again, I wouldn't do it all in one day. I would spread that out across a week. Like if you're trying to sell 10 puts, you could sell one today, one on tomorrow, one another day, and you could kind of spread things out, cash secured put, and at least it allows you to collect some premium. And that's a way to kind of play it and give you some thoughts and insights. So anyways, the chart's very simple. There's not a ton of things technically going on. So you've got a line of support and resistance right here, which is right around that 560, 570 level. One of the critical levels was right around $2, which it held. And now it got into right around that $13 level. It rejected those levels and it was starting to pull back. So now you're kind of like in the middle of this sideways price action. So we'll see what's going to go on and what's going to happen. But it has gapped up quite a bit. So I usually don't chase stocks like this, especially stocks that are up 45%. I'd be very careful and just wait to see how the next day or two evolves. And if you do decide to play it, always play it with smaller amount of capital than you normally do, because these things have already gotten away from their normal trend and kind of behavior. Anyways, I hope that helps. Thanks so much for joining me. Feel free to check out my other channel when it comes to option trading at Tradersfly. And you can learn a lot more about trading vertical spreads, put spreads, you know, selling naked puts. So that way you could buy the stock at lower prices and much more. I'll see you next time in a future video.